Welcome back to another episode of the Mike Smith Investment Show. Today we're going to be looking at Nike. Very sad stock's been declining over the past 2 years. Then we're going to be looking at its biggest competitor in the athletic apparel and footwear industry, On Holdings AG, also known as OnCloud Holdings. Now, a brief comparison to companies. Nike's sitting at a price of $68.55. It's been declining severely over the past 2 years. Shares $1 billion. Market cap $101 billion. Cash is sitting at $7 billion. Debt sitting at $8 billion. Their enterprise value is sitting at $101 billion. For OnCloud Holdings, they're around $20 cheaper. They're sitting at 42.21. Their shares are 323 million. 13 billion market cap. 1 billion cash, 442 million in debt, and a 12 billion enterprise value. All of this in red is projections, which I will get into. Quarter after quarter from 2024 has not looked that good. It's been quite spotty, as we can see by revenue growth quarter after quarter. In quarter 1, 2025, quarter over quarter saw a 6% revenue growth, which is a positive thing. Nike wants to definitely see that, as we'll see by the annual numbers. Gross margin is sitting at average around like 43%, which for a company in that industry is really not strong, as I'll show with OnCloud Holdings. It's so weird. They're such a mature company, and yet their fundamentals are so bad, but I'll explain that reason. So, base case, I have Nike growing by 4%, and, this is, they're not going to be able to sustain a 4% growth quarter over quarter. It's a cyclical company. There's going to be swings in their revenue. Consumers could be spending more. Consumers could be spending less. This is just for you guys to kind of see, a base case of where Nike could sit, say, if they did increase their revenue by a flat amount. I projected their cost of sales grows by 1%, which most likely, if their revenue increases, their cost of sales are most likely going to increase. And I think quarter 2, 2025 is a pretty accurate projection. Other than that, I'm not sure. Quarter 4, 2026, I believe, is a quite accurate projection. If the case is that these projections are accurate, they'll be able to grow their gross margin to 54%, which is a lot stronger number in that industry. And, if these numbers do come in accurate, that's a very good case for Nike. They really need to work on rebuilding their company. Now, for net income, I've been growing by 5%, which, is the base case. It's quite optimistic, though. This company is deteriorating quite severely. They have such a strong brand. Their advertising is so strong, and yet they just can't get the revenue that investors want to see, or really they want to see, right? So for the annual numbers, things aren't looking good. And in 2023, this is really where they saw their huge problem. They allocated a lot of their resources towards their own stores and their online store, and disconnected with their wholesale partners, that being Amazon and Dick's Sporting Goods and Kohl's, and this definitely did not work out for them. It's really when the stock price started to go severely down, and we can see that their earnings per share 3.64 in 2021. 2022 3.83. Ever since then, they haven't been able to grow it back, and that was really their down period. And then 2024, they were able to rebuild it, by 12%. Their net income, anyways, revenue really didn't increase all that much. In 2025, for some reason, they saw a large decrease in their year-over-year net income, negative 44% decrease. Nike really needs to focus on rebuilding their company. In terms of projections, I have them growing at 5%, which I think 2026 is obtainable for them for sure. I'd love to see them grow more. They're such a strong company. They're quite mature, though, so as I'll show with OnCloud Holdings, I don't think they could grow it by that severe of a amount, but I would love to see 10%. I just don't think it's feasible for the company after what happened. They really need to start rebuilding it. By 2030, I have them hitting 59 billion in revenue, which I think's quite obtainable, hopefully, depending what happens. And then their gross margin, I see them increasing to 53% by 2030. Cost of sales, I have this increasing by 1% year over year. A 60% increase because of this very lackluster year in net income. And then, a gradual 5% increase. I think that's attainable, and I think that number looks a lot better from what I had my previous projection on. And hitting $6 billion in net income by 2030. Now, OnCloud Holdings is just such a better company. can see that they do have this historical pattern in a decline in total revenue. They see it in quarter 3 to quarter 4. We could see that in 2023, and we can also see that in 2024. So that's something to note, and I estimated for that in my quarter 4 2025 projection. Now, their net income is quite spotty. I didn't even bother estimating that, and they usually see a negative net income when their pre-tax income is negative, plus a large negative non-operating income. Now, their gross margins are a lot better, and this is where I want to see a company in this industry sit, average like 63%. That's what I projected for their gross margin projections for the next 2 quarters in 2025. Revenue's been spotty. I have them increasing at a base case of 10% their revenue from quarter 3 2025, and then quarter 4 2025 I estimated that they see a 6% decrease, which is a historical pattern and pretty on par for what we have seen previously. I see their revenue increasing by 36%, which is about the average of these numbers that we saw year over year. And then their gross margin 63%. Their annual numbers look a lot better. Same thing, negative net income, but they've kind of been able to get out of that inception point in 2022, and since then they've been releasing positive net income. Great growth. This company shows great growth. 32%. They kind of had a lagging year in increase in revenue. Their gross margin's pretty strong, around that 55% average. Once again, they're going to have upswings, so some down years. So this isn't completely accurate, but this gives you like a good base case of what you're looking for. 40%. And then I see them starting to, slow down. So 30% in 2026, 20% in 2027, 10% 2028, 9% 2029, and 2030, 8%. Like I've stated with Nike, very mature company, so they're not going to see huge expansions in their revenue. For something like OnCloud, it's somewhat of a new company. I'm sure you guys have heard of the shoes and their apparel. Yeah, I think they still can maintain a good growth, but I definitely think they're going to plateau around that 2028 to 2030 time frame. Their gross margin, I have them set at a base case of 57% over the years, which is still super strong. I think they can certainly maintain that by the numbers that I projected. For their net income, I projected them increasing by 40%, and the same thing as revenue. They're going to start slowing down by 2028, 10%, 2029, 9%. I did decide to add their free cash flow, and same thing. They kind of came out of that inception point in 2023 and reported a positive free cash flow. All their trailing 12 months numbers for 2025 look pretty on spot. They're not lagging too heavily, and they still have 2 more quarters to report. So definitely think that they can, increase all of these numbers, that being revenue, that being, their gross profit, net income, and their free cash flow. Free cash flow is very important. Now, I think my estimate projecting that plateau is quite accurate in 2025, but they're certainly going to have down periods like I've stated, so not completely accurate, just a base case. Gross margin 57%, I think that's feasible. I think they'll be able to maintain that. We can just see pretty plainly, it's pretty obvious that On Holdings is such a better company, has such a better grip in that industry. They're a Swiss company, but like I've stated, a lot of their revenue does come from the U.S. So, big competitor with Nike right now as they continue to grow their market share in this industry. And it just looks a lot better from projections as well as just historical patterns. Nike really had that lackluster year, and they have not been able to recover since. Now, overall, I definitely don't think any stock trade in Nike right now is warranted one bit. Analysts are reporting this at 83.31 for their 1-year price target, which is a 22.26% increase. It's quite optimistic. We'll have to see in their next quarterly report. So it's coming up. Hopefully that reports good earnings and maybe Nike's back on track, but it's definitely going to take at least a year for me to even consider a trade in this company. OnCloud Holdings for sure is definitely one you could think about. And their growth rates are super well. I don't know if it warrants a buy rating. Analysts are giving this a 65.19 1-year price target. That's a 57% increase. All you need is the fundamentals, and fundamentals on Holdings looks, fabulous. Maybe after quarter 4 2025, like I said, they see that historical decline from quarter 3 to quarter 4, which is weird because most companies in the retail space see an increase in that quarter just because of the holiday season. For On Holdings, it's a bit different. We'll definitely have to wait. They've been spotty with their earnings, and their earnings per share growth isn't really that great, although they have been able to start to increase it. So, yeah, I think Nike is just such a sorry company. It's such a shame. They're really, really good company, and they just had that 1 year, and they really have not been able to recover since, nor is the stock price. OnCloud Holdings is certainly different. They're below all of their moving averages, but, with growth and the fundamental analysis I just proposed, a lot better company to look at. Overall, I hope you enjoyed the episode. Drop your opinions down below. Definitely make sure to subscribe. It does a lot for me and the channel. Hope you enjoyed this episode, and thank you for watching.